The ultimate illusion in the world of professional sports is that a multi-million-dollar playing contract guarantees lifelong financial security. When fans see blockbusters hitting the news feeds, the natural assumption is that the recipient is set for generations. The reality operating behind the scenes is drastically different. High-earning athletes are uniquely vulnerable to rapid financial liquidation because of the specific structural setup of the sports economy. Without absolute, rigid financial discipline, a massive net worth can completely evaporate in a matter of several years. Examining the unique systemic pressures and financial mechanics governing professional athletic careers reveals exactly why staggering wealth requires even greater economic defenses to survive. The problem of the compressed earnings window and the illusion of permanence. The foundational mistake made by young athletes entering professional leagues is treating their massive multi-million-dollar paychecks as a permanent, standard salary stream that will continue for the next 30 or 40 years of their adult life. The average corporate professional reaches their peak earning capacity in their late 40s or 50s after decades of gradual career progression and financial socialization. An elite athlete experiences the exact opposite structure. They enter a hyper-accelerated peak earnings window in their early 20s, collecting 95% of their lifetime liquid wealth before they even turn 30 years old. This massive upfront injection of capital creates a highly dangerous psychological illusion of infinite wealth. Because millions are pouring into their accounts instantly, young players aggressively inflate their daily baseline lifestyles to match their sudden status. They acquire highly illiquid luxury assets, including massive custom mansions, multi-vehicle exotic car fleets, and high-maintenance personal entourages, all based on their current cash flow metrics. However, data across major professional sports networks demonstrates that the average playing career spans less than 5 years due to the sudden nature of career-ending physical injuries, roster optimization, and natural performance declines. When that brief playing window abruptly slams shut, the structural incoming cash flow drops to zero almost instantly, yet the massive ongoing operational liabilities created by an inflated lifestyle remain completely fixed. Property upkeep, insurance premiums, luxury taxes, and personal staff expenses continue to demand hundreds of thousands of dollars in monthly liquidation. Without an established, disciplined capital preservation strategy implemented during their active playing years, an athlete's accumulated millions can be entirely swallowed up by their own daily overhead costs within 24 to 36 months of leaving the game. Lifestyle inflation, peer networks, and unsound investment risks. The intense competitive drive that allows an athlete to dominate on a global playing field often turns into an absolute financial liability when applied directly to the world of capital allocation. Professional locker rooms function as intense incubators of extreme peer network competition, where young rookies earning league minimums are directly exposed to veterans pulling in tens of millions of dollars in annual endorsement revenue. This environment creates a powerful psychological pressure to maintain a highly visible, glamorous aesthetic simply to signal professional success within the organization. Furthermore, athletes are primary, high-value targets for predatory financial advisors, smooth-talking promoters, and speculative business managers looking to fund high-risk commercial ventures. Because athletes possess massive amounts of immediate liquid capital but often lack foundational financial literacy, they are routinely guided into highly illiquid, unverified alternative investments. These typically include trendy restaurant franchises, private nightclub venues, high-risk real estate developments, and speculative tech startups that claim to offer massive, fast returns. Driven by the same high-confidence, high-reward mindset that brings them success in championship matches, many athletes end up throwing millions of dollars into these glamorous but economically broken business models. When these outside ventures inevitably fail, the capital is entirely lost. True financial discipline requires an athlete to completely decouple their personal ego from their investment accounts, understanding that a boring, highly diversified index portfolio or stable corporate bonds are vastly superior for long-term wealth preservation than a flashy, unstable private business venture. Structural asset protection, and the post-career wealth blueprint. Navigating the transition from an active playing superstar to a retired entrepreneur requires a complete structural transformation of how wealth is handled. In the peak of their careers, athletes often overlook the massive impact of fiscal liabilities, state-level tax obligations, and costly personal legal disputes that routinely chip away at raw earnings. Without dedicated asset protection structures, a single legal complication or sudden personal crisis can instantly wipe out a significant portion of an athlete's liquid reserves. Disciplined athletes protect their accumulated fortunes by instantly shifting away from raw cash consumption and building permanent, institutional wealth frameworks. They establish private family holding companies, utilize asset protection trusts, and hire independent, fiduciary financial oversight boards that do not profit directly from recommending speculative business deals. This protective barrier ensures that their core wealth is legally insulated and systematically locked away from external draining forces, allowing the capital to compound quietly behind the scenes. Ultimately, financial discipline is a definitive bridge that converts temporary, high-performance athletic income into permanent, multi-generational enterprise power. The world's most successful sports icons do not maintain their status by spending their capital to project wealth. They maintain it by letting their money operate as a quiet corporate machine. By mastering the art of lifestyle control, filtering out speculative investment traps, and enforcing strict capital protection systems, an athlete guarantees that their short-term physical dominance translates directly into decades of sovereign financial freedom. Developing a highly strategic approach to capturing digital attention, securing cash flow assets, and automating your income lines is the only way to build lasting financial independence in the modern digital age. If you want to keep discovering how elite creators, internet entities, and top-tier sports entrepreneurs build, protect, and scale their wealth networks across the global attention grid, make sure to hit the like button on this video and subscribe to the channel right now so you never miss our next deep dive into the business models of the world's most lucrative industries.